Ladies and gentlemen, welcome to the study. I am going to show you the last price. What is the last price, you may ask? So the last price or the last trade is the price at which the last match trade took place. So in other words, we found a seller found a buyer for that trade. And so the sell matched with the buy, therefore the trade was executed and you have that in place. Therefore, this is going to be the last trade. When you go to an options chain and you look at the different options chains that we have here, let's look at August 2021. We have the stock Len, L-E-N. And as you see here on Thinkorswim platform, we have the last column, which is going to be the last trade, the net change, the bid price, and the asking price. Remember that the bid and the ask creates a spread. And within that spread, you are trying to negotiate to get that order filled between the buyer and the seller. Now, when we look at the last column here between the bid and the ask, you can see that the last trade between the $1.45 and the $1.65 on the ask was filled just under 165 with 160. So what this tells me is that I can probably get this option for the 110 call on August 20, 2021 at $1.60. If I really wanted to get this options contract and get it filled with certainty, yes, I can fill the order for $1.65 as indicated by the asking price here. Now where this gets really useful is that, check out as we scroll all the way to the bottom here, we have the $1.20 ask and then we have a 0. You are going to see some wide spreads depending on what options chain you're looking at. If there's any market news, earnings, any of that sort, that's going to be fair game because the market maker does not know how to price this. So you have this wide spread. But check this out. We go to that last trade column and you have about 39 cents. So $39 was the cost of that fill. And it occurred between 0 bid and $1.20 on the ask. So this gives you a good idea on how to gauge if you're able to fill an order and make sure you're not getting ripped off. Because if you put in an order for $1.20, they are going to fill it instantly and you're going to end up losing half of your value because it has about an average of about 60 cents on that order. So you want to make sure you're not getting ripped off. And I really wanted to make this quick short video just to give you guys an idea of how powerful it is to see this last trade filled, what exactly you can use it for. And that is one of the best things I love about it is that I can know during market time or closing market or opening market what orders are getting filled at what price while looking at the bid and the ask. And if you end up customizing your options chain layout, you have different settings here: volume, open interest, implied volatility, probability out of the money, delta, gamma. Check this out. I like to line it up with the open interest and the volume. So I could see on this ridiculously wide spread here, $1.20 ask, 0 bid, there was about 0 volume done on that specific contract. Why? Because of that outrageous spread. You can see that there's 237 contracts open in circulation. But if you look at this one just below, the 135 call for August 20, 2021, you can see that there were 4 transactions that occurred on that day. And the last price was at 20 cents and the ask was at 20 cents. This means that maybe somebody got filled at 15, but if you were going to try to get filled on this contract, more than likely you're going to have to get filled at 20, just as it's being indicated here on the last trade. Guys, if you found this very helpful, please follow me, subscribe, let me know what you think in the comments, and I'll be glad to help you out. You can check out the tradestudy.com for more information, and I'll see you in the next one.